Well, nobody really wants to talk about stuff like this, but there are some great teaching points, and the truth is, nobody picks 100% winners. I want to be as real as possible with you guys, and there is a lot of valuable information to be gained by looking at my mistakes, even if it kind of sucks and I don't want to admit it. So I will tell you what stock is my worst stock pick ever, how I picked so poorly, and how you can avoid the 3 big mistakes that I made. And you guys know I give you the truth without the hype, and that's why you're subscribed to this channel. And if you aren't subscribed yet, it's free and easy to do, so don't forget to do it. And at least give the video a thumbs up for transparency, and because it really does help the channel, and videos like this don't push the algorithm like other videos do, and there is a lot of value in this video, so I wanted to get out to everyone. So before I tell you my worst stock pick ever, because you may not be interested in this after I tell you my worst stock pick, let's briefly discuss my new website that houses the Market Insiders private group, which has free access to 3 courses and a 4th is on the way. You see all my moves in real time and a ton more that I will discuss at the end of this video for the price that is less than a cheap date for 2 at McDonald's. Seriously, you can take like $700 worth of courses and then cancel, and it's like getting a 97% discount or something like that. So check out the first link in the description and the pinned comment. Like I said before, nobody's perfect, and yes, I picked a lot of losers over the years. But my worst stock ever is GE, or General Electric. I know it seems so obvious now, but honestly, GE was thought of very differently in the early 2000s than it is right now. I bought this stock for $20 per share after the huge fall in price after the financial crisis, and thought it was a solid blue chip 3x stock at a minimum at the time. Wall Street always overreacts to anything both good and bad, so I love to use the overreactions to the downside to get shares on the cheap. Oh yeah, and there was that whole financial crisis collapse thing that happened as well that might have contributed to everything being so cheap at the time too. Most of the time, this strategy works in my favor. And I mean, seriously, I bought a ton of great stocks that were on super discount at the time. Like I bought more Apple, Amazon, and a bunch of other companies. And I bought a ton of real estate as well because it could be had for 50%, 60%, 70% discount or more in some cases. It was like Christmas for investors. The bottom line with all investments at the time, you literally could not pick a bag of investment that would lose money, and somehow I managed to pick one that did just that. It lost money. So here are the 3 mistakes I made so you can avoid them. The first mistake I made was investing without a clear, defined, and written out plan. Now, if you know me in this channel, I say have a plan more than anything else. And I'm talking about a written out plan on paper that goes from your first buy to what you're going to do if it dips, what are you going to do if it runs up, exactly how long you want to hold, your planned exit strategy, and everything in between. I have a whole course dedicated to just that because I feel it's so important for everybody to do that with every single stock. By this time in my investing career, I knew to have a plan, and I did plan out my stocks. However, I was very loose with those plans and wrote things down, but just not to that granular level. So when rough times hit, I made decisions in the moment, which cost me big time. Do not make decisions in the moment. Make them when there is no emotion and you can think through every scenario. It will save you from missing opportunities or from not bailing before a complete failure happens when you should have bailed. But my second mistake actually made it much easier to make the first mistake. And the second mistake I made was relying on past performance as an indicator of where this stock would go in the future. I assumed GE was destined to get to those 2000 highs and beyond because GE was a great company and just got caught up in this whole financial meltdown like everyone else did. And when the liquidity crisis was over, they would bounce right back and take over those all-time highs. But there was, one really big problem with that assumption. GE was not the same company it was in the late 90s and had taken on a lot of bad debt and had significant leadership changes and actual cultural shifts within the company. Now, this isn't the time or the place to debate why it changed so drastically. But the fact is, it was not the same company when I bought it as it was in the late 90s. But I honestly glossed over those facts based on the past performance of the company because I was getting a screaming deal based on that past performance. Past performance does not predict future performance ever. And the final mistake I made was not acknowledging my mistake and cutting my losses. Look, it ran up after I bought the stock, but then a steady decline ensued, and instead of realizing why it was going down and acknowledging I missed the stock, I bought more. This is where conviction oftentimes gets mixed up with ego or the desire to be right. I actually talked myself into adding when I knew the right decision was to cut my losses. The reality is, no matter how much money I threw at it, it was not going to be a good stock. And yes, I never sold the stock because it pays a dividend, which was just another excuse to not admit my mistake. Now they could turn it around and return some of that former glory. But the truth is, I should have sold and put that money into virtually any other dividend play if I wanted dividends, and I would be up a lot more than I am right now. The bottom line with all this is you will make mistakes. Everybody makes mistakes. But it's important to have a defined written plan, to not get emotional and stick to your plan with a stock even if it sucks. This is why due diligence is so important, and having a plan for both when a stock goes up or down is critical to your success. And don't be afraid to admit your mistake. It may actually save you in the end. And if you don't have a defined plan for all your stocks, or you don't know how to create a plan or value a stock, we can help you with your planning, as there is a course in the Market Insiders Credit Group dedicated to that, along with creating an infinite money loop, and other courses available as well, along with live weekly Q&As where you can ask me virtually anything, a super great Discord group that's just awesome, tons of exclusive videos, downloads, and more, all for the price of a meal for two at McDonald's. Consider it a cheap date that went really well. So check that out. It's the first link in the description and the pinned comment. So thanks for watching, and we'll see you in the next one.